Okay, the final principle that you should keep in mind: know when to sell your stocks. Almost as difficult as knowing when to buy your stocks is figuring out when it's the right time to sell them. If a company is performing well, with no indication that its future growth potential has diminished in any way, then you can hold on to their stock until its market price exceeds its intrinsic value. Or in other words, you can hold your stocks until it becomes overvalued. Sometimes, however, stocks can become overvalued for the wrong reason, and this can be a warning that a severe crisis is in the works. The most common event that leads to a movement in stock prices is when companies release news about a new product line or management change. It can be good or bad news. If it's a positive reaction, the company's stock price will rise. If it's bad, the stock price goes down. Without question, the most important factor that affects a company's value, and therefore its stock price, is its earnings. Earnings are the profit a company makes, and in the long run, no company can survive without them. If a company's earnings are better than expected, its stock price increases. But if a company's results are worse than expected, its stock price will fall. Simple as that. Another factor is market volatility. Stock market volatility often leads to stock price declines across the board, even for companies with strong business fundamentals. Market downturns could be due to several reasons: changes in the economy, profit-taking after strong rallies, and geopolitical events. However, in such circumstances, stock prices may just decline temporarily, and chances are they'll recover in a few months. So you can take advantage of these scenarios to sell your stock at a high price and then buy it back at a lower price. It's a simple strategy for guaranteed profits. Another circumstance you should consider selling your stocks before everything gets worse is when the company suddenly cuts dividends without any acceptable reasons. As a value investor, we understand the importance of dividends, so you need to be wary when dividends are suddenly cut. 90% of the time, your stock price will plunge because investors no longer feel safe about their investments, and they're so concerned about the business performance. So, that's principle number 7. Know when to sell your stocks. In the next module, I'll teach you how to identify a company's economic moats so you can easily determine if a company has sustainable competitive advantages over its industry peers. Okay, see you in the next video.